Young king, you could call the kid sire. Young legend, wanna wait, I'm trying to build empires. No days off, I can never stop grinding. Even when I get the days where the bezels on me shining. Got me dancing like some old flag, I got it.
Welcome to the Not So Privileged podcast. I'm Joe.
I'm Kenny.
And today we're gonna be talking about inflation, rent prices, and why your insurance premium keeps going up. But how you feeling today?
Bro, it's Friday, man. I feel blessed.
It's always good to feel good on Friday, the weekend.
Yeah.
You got anything planned?
Me, it's just spend time with the kids, watch football, watch some
Nice.
boxing.
Nice.
Teach the girls how to fight.
Nice. So you got Canelo this weekend?
I got Canelo.
Oh, okay.
See, the thing is, Terrence Crawford, he's a great fighter.
Mm-hmm.
I think he's probably the best I've seen out of this generation. But man, Canelo was like a whole different league,
Yeah.
different weight class. I don't know.
I got Crawford. And I'm a bet on it too.
Okay.
I think win by decision though.
By
No
decision?
knockout, yeah.
But if he gets the knockout though,
Yeah, I know the odds on that is gonna be
crazy, right?
Crazy. Let's talk about inflation. How is affecting insurance and insurance rates, especially down here in Texas. Inflation is affecting the replacement costs on homes. So you see that your insurance premium that's increasing. It's crazy. It's crazy market.
Honestly, man, look, let's talk about inflation as a whole, because it's not even affecting insurance. I feel like it's affecting everybody.
Everybody, yeah. Groceries.
We saw the price of eggs at a point was like $9 for a dozen, right?
Yeah.
And I honestly have a theory about inflation. I have a theory. So I want to say inflation peaked around 2020, right? 2020, 2021,
Mm-hmm.
right? And that was around the time COVID was at its highest.
Yeah.
And prices went high because demand was high, supply was low.
Mm-hmm.
And companies had to increase their prices to keep up with demand.
Mm-hmm.
So when the world went back to normal, have you realized prices remain high?
Yeah. I think it's because of all the money we was printing, the stimulus checks, things like that, would definitely played a part in it.
So then when you have manufacturers
Mm-hmm.
who say, all right, we don't have enough employees to be in these plants or warehouses that are actually building those products, and they have to increase their prices on it. Now, when the world comes back to normal, why those prices don't come down?
Yeah, that is a good. I mean,
right?
Yeah.
So if you think about it, it's like, all right, you know what? Prices did have to increase during that time.
Mm-hmm.
But once things got normal, people saw a loophole. Well, I don't want to say people. I want to say these companies saw a loophole where it's like, hey, we technically don't have to bring it back down just because you were able to afford it during that time.
Oh, so you trying to keep the profits?
Hey, man, look, I feel like some people are getting greedy out there,
Yeah.
And at that point, when you're insuring something, you're pretty much telling your client that, hey, look, you are going to cover the cost to replace whatever is damaged. So if it's a vehicle and the parts are double the price than what it used to be, and it's still there, now the insurance company has to keep up with that cost.
Mm-hmm.
And now you're not seeing a steady increase. Now it's starting to look like a exponential increase.
Yeah. Yeah. And I feel I guess the weather. I don't know if people believe in what you call it, global warming, but it's a lot of things that's happening like tornadoes, more wind and hail claims and things like that. The frequency of claims plus inflation could affect the insurance premiums.
So now if you talk about weather, we're here in Texas, right?
Mm-hmm.
The most expensive part of Texas to insure homes is Houston. right? And why is that? Because they're coastal. When was the last hurricane that happened in Houston?
I'll say they had like a storm last year? Like, was it like a tropical storm last year or something like that?
I'm not sure. I believe it was a tropical storm. Yeah, I believe.
Something like that. It was like a lot of flooding and things like that. I think that was the last time.
Okay.
Yeah.
Okay. What about the year before?
The year before. I don't know. I was in New York. I was thinking about that New York weather. Yeah.
Somebody tell us in the comments.
Uh,
But so like my point to that is like, all right, yeah, hurricanes happens, right? Hurricanes probably happen maybe once a year, and there are situations where it does happen twice. That we've seen that over in Florida. But if we know a hurricane is going to happen once a year, right? The price should reflect that, right? So now, how do you explain for people who live in maybe 20 minutes away from North Houston and they're paying high premiums?
it's like insurance is a pool, right? So I guess they get charged from that pool. I mean, even though they don't have the high frequency of claims in that area, and like down in like South Houston, they're gonna get affected on the rates. Plus, there's inflation, as you say, cost of materials is expensive. So, yeah, that's the only way I could justify it.
Yeah,
Yeah.
and like see that I completely understand when it comes to inflation, right? But the premium, how it's spiking, doesn't add up, right? And I can't justify it. Like as an insurance agent, I have conversations with like clients all the time, and like I talk about it, and a lot of clients go from paying about $2,500 for the year to almost $6,000 for the year, and that's like almost a 200% increase, and I can't find anything better, right? And for me, I've done everything I can by exhausting all of those options, but to the client, if you're making payments that's about $200 a month and now you're jumping up to $400, almost $500 a month, that's gonna feel a little crazy. Like I could sympathize with clients on that end, and there are companies that are profitable.
Yeah. So you think they just keep it all that profit?
I'm not saying somebody's keeping the profit. I'm saying somebody's getting fat. That's all I'm saying, right? But like it's not just in the insurance industry. We're seeing this across all of the industries across the board, right? And one date that it all ties back to was COVID.
Yeah.
Right. We saw a model that worked.
So they take
business and it just kept going.
That's a good theory, but I don't know. I feel like it's just that it's now everything like the prices is up, like cost of like building like a home. I don't think it's like until something could be changed. I don't know what could be changed to get that down. That will affect the rates.
Hey, look, I'm not saying I have the answers.
Yeah, just have the theories.
But like sometimes we gotta ask the questions.
Yeah.
And if I'm wrong, look, prove me wrong. 100%. I'm completely open. I just like to stimulate the conversation and see, where it occurred, and if I'm accurate, and if I'm not, then it is what it is. But again, none of this is factual. Besides my experiences, I'm just throwing out a theory.
Yeah. All right. And then like, what's like the correlation between rent and like insurance? Like, what would you say is the correlation?
So the correlation between rent and insurance is usually between it usually occurs with the landlord.
Yeah.
Right? Because if you're renting a home or if you're leasing a commercial space, the rents have to be at a certain amount for the banks to lend money on, right? Now, Now, if prices don't make sense when the bank is lending, okay, so let me take it back a little bit, right? So, landlord who owns a property, let's call it a single home, uh, s- single dwelling, single home property, right? Whatever they purchase the property for, they have to be able to keep up with cost, right? Now, insurance is also affecting the cost of 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 the home because home insurance is starting to increase at an exponential rate, right? So banks got to make sure they can make their money back. Landlords got to make sure they're profitable. So who has to eat that? The renter,
Of course.
right? So it's just a chain of people just taking money.
Yeah. Yeah, especially if you get a shoebox and you paying about like almost what,
$1
$3
million,
grand
nah, $1 million.
for rent. Yeah, it's for
Yeah.
$3 grand.
Think of the homeowner
Yeah,
paid $1 million for a shoebox.
yeah.
Right?
Somebody got yeah.
Somebody gotta
gotta get that,
pay.
yeah, you're right.
Right? And
Uh-huh.
and if you take it a step further, people will pay.
Yeah. They have no
So
choice. You gotta live somewhere, right?
supply and demand.
Yeah. Huh, I like that.
So it's hey, look, call me crazy. I say a lot of crazy stuff. I do a lot of crazy stuff. It's a combination of both. But we gotta call a spade sometimes.
Yeah.
You know?
No, I get it. I get it.
Mhm.
No, but what do you think of some like ways that like we're seeing these companies increase rates and everybody look at us like we're so as brokers we're like the middleman. So like the company's gonna raise rates and it's our job to let the client know about the renewal. So the client they're paying $2,700 for the year, let's say for like a home in Houston or something like that, and we'll get the renewal like 60 days before like the the renewal date, and it's our jobs to call the client and say, hey, look, your rate's not gonna be the same. It's gonna be 3,700 this year, and they just get mad at they just get mad at us like we're raising the rates.
Yeah.
And the best thing that we do is we just shop them around, and then there's usually a carrier that's either gonna give them like a better rate or even beat the rate that they had before. So like that's what we usually do.
Yeah.
Yeah.
And honestly, like, to add on what Joe said, we are pretty much the buffer,
Yeah.
right? The carrier makes the decision to increase rates. We take the grunt of it. Right? We take the grunt of it. But again, it's our job to work for the client. So if the carrier increases rates, we need to find a company that will, one, properly insure the client, two, pay claims, right? A lot of companies, they're here today, gone tomorrow because they're insolvent. Why? Because their financial strength is not strong enough.
Speaking of financial strength, like what are like the rankings like? Because I know there's ranking of like A rated. There's like a
Yes.
B rated.
Yes, yes. So when it comes to financial strength, you want to make sure your carrier is rated an A or better. Okay, anything that's less than an A is not a financially strong company. They are literally borderline ready to go insolvent.
Yeah, they probably will give you a good rate, but your house burned down. I don't know if they're gonna replace
Yeah,
replace it, pay out that claim.
yeah, they might give you a hard time. They might give you a lot of runarounds. They might take a while to cut the check.
Yeah.
So that's one thing that we as agents we look at.
Yeah.
Um,
Yeah, you definitely want to deal with a company. You pay an insurance for a reason, right? So they should, if there's a claim that arises, like they should pay out as soon as possible, quick, have the process seamless, and that's usually like the carriers that we usually deal with.
right,
Yeah.
right. And I forgot where I was going with this.
Oh,
Yeah.
you was gonna say the A rated, B rated.
No, before that.
Oh,
I'm sorry.
it happens. It happens. But yeah, I was speaking on renewals.
Yeah, no, I completely forgot.
Okay.
Oh, something about.
Well, for renewals, If you're an agent, always make sure to reach out to the client if you see that renewal is coming up high. Because if the client reach out to you, that means it's too late. That means they're already shopping, they see the rates, and they're gonna be pissed off, and you're gonna get Usually when you reach out first, they know ahead of a time, and then you already probably have a quote with another carrier, and they're really happy about about you just taking the initiative to saving the money, and they will actually want to do more business with you. Maybe a auto, maybe a umbrella policy, maybe a life policy, and they'll maybe even refer you to one of their friends or coworkers.
Look, the best agents are the ones who service.
Yeah.
That's all it is.
Yeah.
Shopping the renewals is servicing, right? And even the agents that the sales producers that we have under us, usually people don't like to service. They like to focus on the sale, but they don't realize when you service, you get more business out of your clients because they know you care, right? We're in the business of caring for our people, right? We got to take care of our people, and when you do, the people take care of you, right? That's like a rule that stuck with me since the beginning of time.
Yeah.
So yeah, that's renewals. Renewals. Be on top of it. Reach out to your clients before it comes. Reach out to your clients before they receive it, and be a step or two ahead.
Yeah. It's always better. It's always better. And yeah, you can write other businesses, like other business that they even maybe they have a business. They'll want you to quote out. It's just least everything, and then the account as a whole will be more profitable for you, and everybody else is happy. Everybody's saving money. That is a win-win for everybody.
Right.
Right. That's what you want.
So question. If you could tell the listeners, what can clients do to offset
like the rising costs?
I don't want to say the rising costs, but like what can listeners do to offset increases in premium?
I would say for auto, the easiest part would be to, if you can avoid it, don't get into any accidents.
Yeah.
What you could avoid is speeding tickets.
I just got one.
Oh yeah.
Yeah. Messed up. The highway was way too open, so why not go 90?
Yeah. You see, I learned. I had like 2 or 3 speeding tickets. I learned if the highway's open, there's a cop waiting for you. If it's like kind of like some traffic, a little bit of traffic here and there, like not too much, maybe you'll get away with it. But if it's really open,
think so?
Yeah.
I say, man, I seen cops hiding in traffic.
Oh yeah,
just like in the corner.
Just there.
Yeah.
No. But yeah, don't get into like if you could avoid it, don't get into any accidents. Speeding tickets, that will help definitely. And always shop around. Every year, shop around. If you have a good driving record, if you probably just bought a house within a year, you can always, when you are a homeowner, you get a better rate than somebody who's single and a renter. So you could get re-rated with a different carrier, and the rates will actually be less than just as a single renter. Or married individuals as well, they get better ratings. So if you got married within that year, it's always good to list your spouse, have all the cars together, so you get the multi-car discount. That definitely helps save some money. And then for the home, so if you did any renovations within the last year, maybe like a new roof, that definitely can help lower the rates. What else? If you added any like alarm systems that's like monitoring and things like that,
Right.
that can help. I'm missing anything? I think that's what I'm missing.
No.
Oh, I'm good.
Yeah.
Okay. Yeah, I think those are the main thing. Like every year, always review your policy. Review your policies. If anything happened within that year, you want to make sure that you quote that out and see if there's like a change in premium, or get a quote with a different carrier. That's it. I would say every year.
Or just reach out to your broker.
Yeah, you can reach out to your broker.
Yeah. And they'll be able to take care of it.
Yeah. Yeah, you can reach out to us. No. What about you? I missed anything or?
No, I think you
Yeah.
hit all of the things that you can do on the head.
Mm-hmm.
When it comes to auto insurance, again, try to avoid accidents,
Mm-hmm.
tickets, violations. Don't do it.
Mm-hmm.
If you buy an expensive car, expect expensive premium.
Yeah.
You know, again, we're talking about the cost to replace the vehicle. So if the
Yeah.
vehicle costs 100 grand,
Yeah.
then your cost of insurance
Mhm.
will reflect. Um,
And if you buy a new car, get gap insurance.
yes,
Do not be like, oh, cheap. Like I don't want to put it. Get gap insurance.
yes,
Yeah.
and for those who don't know what gap insurance is an insurance policy that you usually get from your dealership, and it covers the remaining balance that's left on a vehicle after the insurance company pays the vehicle value.
So I think so for the listeners, like auto policies are usually actual cash value.
Right.
Yeah.
So like pretty much uh, actual cash value is the insurance company paying for the car for what the value is today. So if you bought a car for 25,000 and the value today is 20,000, the insurance company is only covering you for 20,000. So if there's a $5,000 balance, if you don't have gap insurance, you're stuck with that cover. You're stuck with that balance. So gap coverage is super important. Usually it's anywhere between 350 and 650 for the year, and not for the year, 350 to 650 in total
For the lifetime.
for the lifetime
Of the loan,
of
yep.
the loan. So by paying 650, you may save yourself a couple $1,000s in the future if you ever were to wreck a car.
Yeah. Yeah. Actually happened to my one of my friends. Drove his car off the lot, brand new car, and he got into an accident like a couple weeks, and he had gap insurance. They totaled the car. The insurance totaled the car, and then gap insurance covered the rest.
There you
Yeah.
go.
And yeah, he's happy. He got to
Out
get a new car.
scot-free.
Yeah. There's some people who get stuck paying the car and they don't even have the car anymore, and it's just crazy.
Yeah.
And how you get a new car when you have to pay for another car that you, yeah, that could, yeah, put you in a
Better have a good bank and just roll it in.
Yeah. Yeah. All right. Yeah.
All right. So hey, look, that's what we got for today. If you guys have any questions or if there's anything that you guys may have missed, feel free to drop a comment, email us, DM us, reach out however you want.
Yeah. All right. See you next week, guys.